The prep is done, the chart is clear, all parameters are met, but as price hits the entry zone, your hand stays still. Executing a mathematically sound plan often triggers the same physical panic as making a reckless gamble. Your heart rate spikes and your breathing becomes shallow. This reaction stems from a threat detection system evolved for physical survival. It was built for predators and falling rocks, not for navigating financial markets. Look at how the brain processes this data. One path represents actual danger, the other represents uncertainty. Both trigger the same central alarm node. The brain struggles to distinguish between "I don't know what happens next" and "I am in harm's way." A valid setup remains scary because having an edge does not eliminate the uncertainty of the very next trade. Freezing at the button is a natural biological misfire. Successful execution requires you to intellectually override that alarm. Manage the pressure of trading by systematically categorizing your fear. The first category is fear of risk. This is a protective biological alarm that sounds when you force a bad setup or trade a position size that is too large for your account. Silence this specific alarm by using predefined risk. This creates a mandatory structural boundary where you accept a specific dollar amount as the cost of the trade before you enter. When risk is undefined, the scale tips heavily toward financial survival. Your attention moves away from objective market data and locks onto your own panic. If your risk is not predefined, the fear you feel is a protective signal that you should not be in the market. The second category is fear of uncertainty. This hesitation occurs even when your risk is strictly predefined and the setup is flawless. Professionals use probabilistic thinking to manage this. It is the mental framework required to trust a trading edge. This scatter plot shows edge. A single trade guarantees nothing. First points show unpredictable variance. But as the sample size expands to hundreds, variance smooths into a clear upward trend. Because edge only exists in the aggregate, total certainty on any single trade is impossible. Execution acceptance means embracing this unavoidable uncertainty. New traders often demand a guaranteed outcome on every single click, expecting the market to prove them right immediately. Professional traders still feel the physiological discomfort of uncertainty. They execute because they trust the macro probabilities more than their micro fear. When a losing trade occurs, the professional absorbs it as a normal part of their statistical baseline. Before your next session, apply a practical rule to separate your fear before you click. Use this pre-click checklist. 1. Is this my setup? 2. Is my risk predefined? When the answer to both is yes, you are sitting in the normal, unavoidable uncertainty of the marketplace. Next time you freeze at the button, ask yourself, is this fear telling you risk is too large, or that uncertainty exists? Keep in mind, this is strictly educational content and not financial advice.